Hi everyone, Mathis Connor here with Connor Management Group, and this week we're going to look at the best technology stock to buy right now. Today is Thursday, March 13th, 2014, and we're going to get right into this. The industry we're looking at is data storage devices. That's the industry this company is in, and the 12-month upside potential we see on this stock is 19.7%. On to the next slide, we see that the name of this company is called NetApp Incorporated. The ticker symbol is NTAP. And if you haven't heard of NetApp before, maybe you knew them by their former name, which was Network Appliance. They were founded in 1992. Once again, we see the 12-month upside potential of this company at 19.7%. On to the quick facts slide. This is the business summary we have for NetApp. NetApp Inc., formerly Network Appliances, engages in design, manufacture, and marketing of network storage solutions for storing, managing, protecting, and archiving business data. The company supplies enterprise storage and data management software and hardware products and services. Now that's a little bit of a mouthful. I just did a little more digging, of course, to try to find out exactly what does that mean. Well, you can think of NetApp as a hardware provider that works with other companies and enabling all of this cloud computing. A lot of cloud computing is meant to lower the hardware storage requirements of end users within companies, and as more companies like Microsoft moves their applications into the cloud, well, they in turn start to have hardware demands for storage and managing all the storage of all the different users around the world. Well, NetApp is a hardware company that uses flash memory and works with other software providers to lower the costs of all this cloud computing demand. So that's the space you could think of them as being in. They work in the kind of the virtual cloud computing services space, and they work to lower the demand for all these new services that have been coming online. All right, the website for NetApp is www.netapp.com. The company is headquartered in Sunnyvale, California. They were founded in 1992. The number of employees they have is 13,060. Once again, the ticker symbol is NTAP. The sector they operate in is technology. The industry is data storage devices. The annual revenues over the last 12 months were $6.4 billion, a sizable company. The net income was $614 million, and the cash from operations over the last 12 months was $1.4 billion. And their market capitalization stands at $12.5 billion. And just as a quick reference, for 2012, 50% of their revenues came from the United States, 30% of their revenues came from Europe, Middle East, and 14% of their revenues came from Asia Pacific. The other remaining 6% came primarily from Canada and Mexico. On to their products and services slide. As we mentioned, NetApp is effectively a hardware provider, so we don't have any real fancy photos here. We've got a picture of their logo, NetApp. And we have a picture here of two of their hardware devices, which are basically just boxes. The company text from one of their devices says, "Introducing the FAS 8000. Drive workloads 2 times faster and ease your transition to the hybrid cloud." Okay. Another one is, "Get insights in a flash. NetApp EF550 flash array delivers sub-millisecond latency for performance-driven applications." The other one is Unbound Cloud, the new vision of cloud data management. Discover how NetApp helps enable seamless data management across multiple clouds. So you see how these descriptions kind of fit in with what I was just describing earlier. On to the NetApp metrics slide. As mentioned, the annual revenues over the last 12 months have been $6.4 billion. The net income, $614 million. And the cash from operations, $1.4 billion. The operating margins for 2012 for NetApp were 15%, and they increased slightly. For 2013, the operating margins stood at 16%. On to the valuation metrics. The trailing PE ratio right now is 22.0, and the forward PE ratio is 12.6. So that implies there's still a common belief that earnings are going to grow over the next 12 months. The PEG ratio is at 1.0. You know, that's a good sign, supporting that growth will occur. Price to sales ratio is at 1.9. Price to book is at 3.2, and the enterprise value to EBITDA ratio is at 8.7. So right now, based at today's pricing of NetApp, you can see that the valuation says, you know, this is a company to consider. I mean, a tech company with a forward PE ratio of 12.6. Hey, that sounds a bit low. With trailing PE ratio right now, 22.0 for a tech company, it sounds a bit in line. The PEG ratio 1.0. That's good to see. Especially when you believe the company's still going to grow quite a bit. So overall, these valuation metrics suggest that this is a company to take a good look at, and you know, it could conceivably be solidly undervalued. Going on to the recent closing price for NetApp. At yesterday's close, it stood at $37.85. The 52-week low was $32.75, and the 52-week high has been $45.96. So with a recent closing price of $37.85, it's closer to its 52-week low than its high. And we'll get into the reasons for that. The 20-day moving average is $39.87. The 50-day moving average is $41.35. And the 200-day moving average is $40.78. The average daily trading volume for NetApp is 4,405,000 shares per day. The beta for the company is 1.7, implying that the company in the past has tended to move more when the market goes up, and it's tended to move down more when the market's gone down. The dividend yield is at 0%. That's a 5-year average. The dividend payout ratio for 2013 is at 33%. The company just started paying dividends over the past 2 quarters. So that's something that'll be changing going forward. And on to the next slide, we're looking at NetApp's price chart. Going back to, let's see, around May of last year, the stock was down around, around 35, the 35 to 32 dollar level. We were talking about, and the company from that point, it's probably a little bit before May, but from that point, it steadily moved up to about $44 in mid-September. So been a nice increase for that period through mid-September, where it reached around $44, and then the stock pulled back from that $44 level in mid-September down to around $38 in early November. Now, the reason for that pullback was an analyst downgrade. Analysts at a company called William Blair had noticed that there had been increased competition, but we think the announcement was more, and the pullback was more related to the fact that one of their technology partners, Cisco, made an acquisition in a space similar to NetApp's scope of service and work. So while there had been some speculation that maybe Cisco would acquire NetApp, Cisco actually went out and bought someone similar to NetApp. So that, of course, just spooked some investors, and also it dashed the takeout speculation of NetApp by Cisco. So the company's stocks pulled back from that $44 level in mid-September, and it pulled all the way down to about $38 in early November. Now, from that $38 level in early November, the stock started to climb back a bit, and it bounced a little bit, but it made its way back to, let's say, around $40 in mid-January. And in mid-January, the stock took a very fast rise from that $40 in mid-January up to almost $46 in a couple days. So within January, or say within a week or two, it went from $40 all the way up to $46, and that jump was also related to speculation. It turns out that a couple of hardware cloud-related providers had revised their earnings outlook upward, so all the companies in the space had jumped in price. And consequently, that high price, there was speculation that high price didn't hold, and also about a week later, it pulled back down to about $41. So that's hey, this is the nature of technology companies. There's oftentimes a lot of speculation about how much demand it's going to be, whether they're going to be a takeover target, and NetApp in the span of a year has just shown that very clearly, just two occasions. So the stock pulled back down to around $41 in early February, and then their earnings came out. It bounced a little bit more, but the earnings have since pulled that stock price down to the $38 level where it is right now. And basically, their earnings, for the last reported earnings, which came out in mid-February, they basically beat their earnings expectation, but they missed on revenues compared to a year ago. It just declined slightly by maybe 1%. So, additional people sold the stock off, and that's where we are right now, right around $38. So the stock is not much higher than where it was a year ago. And as we mentioned earlier, it's closer to its 52-week low than its high related to these speculation events. Now, going on to the next summary slide, taking a look at the financial statement quality of NetApp. The company has excellent financials. Remember their revenues are around just a little over $6 billion, but the total debt they have due over the next 5 years is just $750 million. And the total debt they have outstanding in total is just $995 million. And that's on revenues of $6.4 billion. And, you know, their profit margins, if you just do it quickly in your head, it's roughly around 10%. So 10% of $6 billion, that's $600 million. You know, the debt they have in 5 years, that's $750 million. You see that's not much in the grand scheme of things for them. The operating margin trend, it's flat, you know, 15, 16%, right? Definitely respectable. The price pattern trend, overall, we say, you know, the price pattern, it's flat for the year. There was a recent pullback we just described over the last 2 months, which has been related to their earnings, quote unquote, miss. But you know, we still think that this is a good opportunity. Overall, the market outlook was still a bit bearish, not as bearish as we have been in the past. Where we still see some names that are overvalued and still are pushing higher, but we're starting to see some good opportunities that are starting to develop right now as well. So I'll just say we're modestly bearish, and hopefully, or just the way it is, maybe we'll be changing that outlook shortly. The recent closing price for NetApp, yesterday's close was $37.85, and our 12-month price target for NetApp is $45.29, and that's less than the 52-week high. And also, I'd like to say that price target, it's being driven by some conservative earnings projections compared to the typical consensus earnings outlook. So the earnings projections we're using are lower than average than the posted consensus earnings results. So we feel pretty good about a price target of $45.29, and that gives us a 12-month potential for this company at 19.7% for the next 12 months. So right now we believe that NetApp is the best technology stock to buy right now. You know, as with many technology stocks, it can be a wild and not smooth ride in price. But NetApp, they have a solid customer base, and you know, they've gone through some changes. They've been part of some speculation in the past year, and our 12-month price target is below their 52-week high. That's for sure, and our earnings estimates are lower than average. So we feel pretty comfortable with this 12-month potential, and who knows, maybe the company can surprise and do even better. So that's where we are. NetApp we view as the best technology stock to buy right now. And on to our last slide, just a reminder to go sign up for our newsletter. Just go to www.gmcstockpicks.com, and you hear about stock suggestions and considerations like this one. And these stock picks are a result of our proprietary algorithms, where we review and rank and analyze over 3,500 stocks every week, and we rank them based on appreciation potential. So we identify those that have the most appreciation to go up, as well as those that have the greatest potential to go down. So, you know, we're still fairly new on the block, and we intend to show everyone just how good we are. So we hope you found this presentation helpful, and we'll talk to you soon. Take care. Bye.